Good morning. It's Wednesday, September 11th, and it's 6 a.m. Central Time, and I was up way too late watching the silly debate. So, looking at the overnight price action here in precious metals, they are surging after Tuesday's slightly higher session. Yesterday, we saw gold futures trade in about a $20 range. They remain below $25.50. Silver futures continue to struggle, gaining only about 7 cents on the day and continuing to fluctuate between 28 and 29. I call that particular range a bit of a mess here. So, weakness in the outside market really caused concern for physical commodities. We saw crude oil futures yesterday decline 3.5%. We saw soybeans down 2%. We saw copper down 1%. The common ground amongst those particular products and somewhat silver is they all rely on Chinese demand. Now, checking on the overnight price action, we've got December gold recapturing 25.50, trading up to 25.58, and as of this recording, we're just above 25.50. Gold futures seem to like that particular level there. There's been a lot of congestion at the 25.50 level, and there's a lot of profit taking that's been going on slightly above that level, and the dip buyers have come in just a little bit below that level. I did mention in a video yesterday that volatility has come out of that market with the average true range only about $33 a day. Now looking at December silver, up 56 cents, breaking through $29 to the upside. Nice move, about 2% higher here. And then December copper up about 1.5%. That's about a 6-cent range higher at 4.15, and platinum futures are unchanged at 9.43. Some other standouts in the markets here, U.S. equities under a touch of pressure here. Also, if you look at crude oil futures, up about 2.25%. That's a $1.50 move at 67.21. One of the potential catalysts, we did see a drawdown on the API data. And we do have a tropical storm that is expected to strengthen into a hurricane that could take off some of that crude oil production offline. Looking at soybeans, up about 1%, getting up to 10.08 in the overnight market, and the dollar index just a bit lower here. So, a couple things here. I don't like to get political at all, but I feel like Harris probably edged a bit higher on that particular debate. Harris does have, in the Biden administration, does have a softer stance on China. Perhaps if they believe that Harris could take the office, we could see some of these China-related products like crude oil, like soybeans, like copper, like silver, all start to surge. And I think that's where some of the price action, and don't crucify me, I'm just speculating. It's my guess just as much as anyone else's on why some of these products are going up in the overnight market here. You do have a breakout in the silver market just above the $29 level, and crude oil futures did get bludgeoned yesterday, so this could be a bit of dip buyers coming in and a bit of short covering going on. So today we're going to see another round of inflation data and some of the final figures before the Fed's meeting on September 18th. Again, circle that in your calendar. We do have CPI and core CPI and year-over-year CPI coming out. Now, they do say that it probably climbed in August at the slowest pace in more than 3 years. So if you look at the core CPI, and that's what strips out food and energy, and in my opinion, that's the most important thing, is food and energy. But if you strip that out, it's 0.2%, and that's what the previous month was. If you go the month over month, again, 0.2%. And if you go CPI year over year, it's 2.5%. We are going to have crude oil inventories come out, and they're expecting a build of 900,000 barrels. So a lot of people trading crude oil for whatever reason. Write that one down too, and you want to check that out. Now, looking at the CME's Fed Watch tool, 69% chance that the Fed cuts 25 basis points versus 31% of a 50 basis point cut. Again, I'm under the belief that the Fed will only cut 25 basis points because of the fact that they reserve 50 basis point cuts for things like panic in the market, a rescue, things like that. I just don't think that we have that particular environment at this particular moment. Now, getting back to the commodities and looking at gold futures, 25.51 right now, one of the best performing commodities over the past year, up about 22%. We've seen strong central bank purchases, and we expect that type of continuation to occur. We've got heightened geopolitical risks, although I think they've been dampered as we get closer to the election as far as what's going on. Little bit of election jitters here. The question around that rate cut, is it going to be 25 or 50 basis points? But remember, at Jackson Hole, Jerome Powell stated that the time has come for Fed policy to adjust. So it looks like for certain, we should see an interest rate cut. So the question is, if you're a gold investor, what is the pace that the Fed will use to reach that neutral rate, and what is the neutral rate? So if you're long the gold market, you want to see 25 basis points and a continuation of that for the next extended period of time. Now, if you get that type of surge on the gold market, and we are coming up to, at the end of the month, another seasonal play to the long side of the gold market. So we welcome coming into that any kind of correction in the gold market to position for something like that higher. We will be looking at adding particular options and also 10-ounce micro contracts on any kind of substantial dip. Getting into the silver market, that is a bit of a constructive higher low on the charts. I was looking for a pullback down to about the 200-day moving average before sticking the toe in the water. We are getting a few things constructively as far as some of the indicators and momentum indicators are starting to happen. Stochastics are starting to rise from oversold territory. DMI plus is starting to converge on minus, and those are oftentimes the warning shots that you get before some kind of surge in prices. Now, don't get me wrong, there's quite a bit of headwinds. You've got the 50-day moving average. Throw that up on your chart. 29.54 is where that's at. That's going to be your first area of resistance. 30.04, $30 to $30.04 is going to be your pocket resistance on a silver market. You get that on a closing basis, chances are you could see another run to 30.54 and 32.50. So write all those levels down. Those are the levels that I keep on reiterating. So it's going to be a fun day with a lot of volatility in the market here. You got any questions? Give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck. Go get them.